We will go ahead and get started here. We'll call to order the Board of Trustees meeting for the City of New Smyrna Beach Police Officers Retirement Plan. We have a determination of a quorum, minus only Mark, our chairman, and we'll go ahead and get started. At this point, are there any public comments? Seeing nobody, there'll be none. We'll move on. Next thing is going to be approval of the July 10th, 2025 minutes. If there's any questions, I'd be happy to answer those. Otherwise, I'll be looking for a motion to approve the minutes.
So moved.
Okay.
Second.
Okay. Any other questions? All in favor?
Aye.
Any opposed? Okay, the minutes pass. All right, moving on to new business. Trustee terms. Mark Severance is our 5th trustee, and his term expired 10/1. He asked me to wait the last meeting because he was trying to make a decision whether he wanted to serve again. I checked with him this morning, and he regretfully is not going to be able to serve again. So he has some issues that are going to prevent him from serving again. So that means that at this point, we will be searching for a 5th trustee. At this point, I would recommend that anybody who knows somebody they think that would be a good fit for our board. Obviously, you don't have to have a knowledge of being in having been on a board before, but someone that you maybe know that would have a genuine care about the membership, and working as a team with the other trustees. So the 5th trustee is just someone who you guys nominate and approve. So if you had somebody today that you wanted to, you could nominate and approve them, but basically they do not have any requirement to live in the city. There's no requirement at all. They're basically called the warm body. So anybody that you think would be a good fit, you can send to me. I can reach out to them if you want and see if they're interested, or you guys can, and you can nominate them at the next meeting.
Can we maybe ask the city clerk to post an ad on the city website looking for people to be appointed? Acknowledging that they won't be appointed by the commission, but they'll be appointed by this board,
right,
and make applications to it?
Sure. Pedro, I don't think there's any issue with that, is there? To ask the city to post, just to give, get a pool of names maybe that for the 5th trustee position?
No, of course not. That's perfectly fine.
Okay. So I will reach out and do that. And
okay.
You may just make a note of that. Okay, moving along, Palmer Wilson was council appointed, and he expired on the 1st of this month, and he has been reappointed. So Palmer will serve through October 3rd of 2027. Okay, so glad to have him still here. What we would probably do is schedule to have an election at the next quarterly meeting, since we've lost our chairman. So we'll let the dust settle, see if we get a 5th, trustee on board maybe. And we'll kind of reset that for next. But at this point, Palmer is our secretary, so he'd be the first person that I would reach out to with any board business, okay, in the meantime. All right, moving on to a renewal of your fiduciary liability policy. It expires 11/2 of 25, so in 3 days. The renewal came in at the exact same cost, which I've seen on a couple plans now, which is great news. So usually it goes up about $150 to $250, a year. This is the exact same fee, so I would just need a motion to approve binding their fiduciary liability policy.
I'll make a motion to approve.
Second.
Brandon?
My alibi's already been established. You can do this.
Any other discussion? All in favor?
Aye.
Any opposed? Okay, motion to bind fiduciary liability passes. Okay, and we'll be moving on to reports. Foster and Foster, Patrick Donnellan. You guys are one of my unique plans. I don't have anybody else that the board decides the supplemental amount each year. So with that, we asked Patrick to come, and so he can discuss that and go over it with you. Patrick, you're up.
Yeah, so you know, there's two things about the share plan. One is it's only applicable to people hired before, or that retired before 2022. So there's not going to be new people getting the supplemental benefit. And then it's frozen at 200,000. The state monies, any state monies that come in up to 200,000, the city can use. And anything above that gets split 50-50 between the city and the share. And so last year we got 112,000 into the share. And this year we got 139,000 into the share. And we only paid out in 2023, 106,000. So we're getting in more each year right now than we're paying out. So I think you guys could, if you wanted, change your amount from $280 to $300 a month starting January 1st. You know, every year you guys evaluate this and decide what you want to do for the next year. You haven't done anything since 2019. You know, it's been the $280 a month ever since then. So I think I'm comfortable if you wanted to increase it to $300. But it's up to you guys, so that's why we're here.
You guys have any-
Sounds like we can afford it. I mean, I would make a motion to raise it to 300 for next year.
Okay, so I have a motion to raise from $250 per month to $350 a month. That'll begin the fiscal year for 2026.
What did you say, Troy?
So we would be increasing from 280 to 350 a month, and that would begin when?
300.
No,
I thought.
300.
No, I had
300.
300.
300, okay, sorry about that. And then when would that begin, Patrick?
January 1st.
January 1st, okay. Okay, so I've got a first. Do I have a second?
I'll second.
Okay. Any other discussion? All in favor?
Aye.
Aye.
Any opposed? Okay, motion passes to increase from $280 a month to $300 a month. Okay, and I appreciate it, Patrick. Thank you. Anything else that you need of Patrick? Okay, thank you, Patrick. I appreciate it.
Thanks.
All right, I'll just put it on mute and I'll stick around just in case anything comes up. But
Perfect.
if I log off, it was good to see everybody.
Appreciate it. Thank you,
Good.
Patrick.
Thank you, Patrick.
Okay, next up, Burgess Chambers. We have Frank Wan with us.
Well, good afternoon, everybody. I am here to report some amazing news, and given that we are meeting about a week and a half later than normal, we actually have your rankings as part of our report this quarter. So let's dive straight into it. Now, if I can lead your attention to, let's see here, page number 17 out of 54 on your PDF. Starting at the top, highlighting the great news this quarter was your quarterly results ending September 30th with a return of 5.6% highlighted in blue. You know, as we typically rank your plan against about 600 other public pension plans, we were able to aggregate about 40% of that data to come up with the first cut of your universe. I'm going to give Mr. Palmer a minute just to navigate there.
Yep.
Page 17 of 54. Awesome. So again, for the quarter, starting at the top, 5.6%, you among your rankings, top 10 percentile. As the quarter goes on and when we issue our final account, you might see this ranking fluctuate a little bit because more and more public pension plans will have reported their results. But based on the first cut, with about, call it 300 public pension plans, we rank in the top 10. Okay, so which is amazing news. And then for the past year, as you know, this closes your fiscal year, we actually produced a rate of return of 12.1 that also ranked you in the top decile, just about. And those numbers, you know, I would say are a little bit longer. So I'm comfortable to say you'll probably fluctuate within 3, -3, +3, so in the top of your peer group by all standards. And rolling 5 years, you can see the rate of return has been 9.5%, and that also over a consistency ranked your plan in the top 33rd percentile. So again, all in all, really great news across the board. So why did the plan do so well? So then as you migrate down the numbers, if you look at a section called domestic equity, we have roughly 14 million invested in domestic equity out of the 26, and that's roughly 50, call it 56, 58%. It's been a consistent overweight. At one point, this plan was actually about 11% overweight to domestic equities. And remember, Mitchell presented a case to reduce your overall allocation at the last meeting. So we have actually reduced that back. So now we're about 8% overweight in terms of our equity exposure. But still, again, having an exposure to U.S. equities has been the key winning formula, where you can see over the last 5 years, the result has been in 15 to 16% rate of return across the different spectrums. Now, this has been an interesting year because just below that green section where it says domestic equity, you can see that international equity is actually roaring quite a bit. So we did rebalance back a little bit into international over this past year, largely because we wanted to hedge the U.S. dollar. I think our team has done a good job in doubling as your travel agent. Wherever the dollars or the pesos are strong, we have recommended, places to visit around the world. This has been an interesting year where we actually think you should stay put because your dollar isn't going as far anymore as it has in the past. But that translates into investments is that foreign investments actually got a boost because of their foreign currency exchanges. So as an example of that, right now this year, if you lived in the U.S. and invested in Japan, you actually got a 12% return because your money translated back. But if you are a Japanese citizen investing in Japan, you only got 2.9% on your return. There's been at least a 12% translation if you took it back in US dollars. And that is a sizable difference with international versus the US. So why do we rebalance back to international given all the geopolitical uncertainties? Is really because of the uncertainty with the US dollar. We just wanted to hedge a little bit because the dollar has weakened so much, and actually by being international provides just a little bit of safety hedge. And then as you migrate down to real estate is becoming a very interesting spot for us, especially as the Fed lowered rates again this time. So remember yesterday when the Fed met and announced that they're going to cut rate by the second time this year, there's actually some expectation that the Fed is going to continue this rate path right downward. At the end of 2026, there are some projections that the interest rate would fall from 4% today to as low as 3%, 3.13%. So if rates continue to fall, guess which asset class stands to benefit the most? Real estate. So as we evaluate the prospect of real estate, what we also know for a fact is that there's been a shortage of supply in the last few years. Maybe not apartments, but everything else, right? Everyone's built apartments, but no one's built commercial offices, retail. So again, there's been a shortage of supply. But as people are looking to really rebuild these facilities, inflation has really caused the cost of building materials to go up. So by default of having replacement costs go up, real estate valuations will go up. But over the last 3 years, real estate has been on a decline in terms of their appraised values. However, as things heat up again, transactions pick up again, those transactions will actually earmark to today's values based on the material cost. So as a result, we have seen a slight inflection on real estate, and you'll notice through American Realty that for the third or fourth quarter in a row that they have produced about a 1.1 to 0.5% return. It's starting to shape upward, right? We've had 2 years of negative adjustments in terms of appraised values, but finally they're starting to take shape a little bit higher. But as we have also mentioned that if we can get the same rate of return on bonds, we're not going to exchange low risk for high risk in real estate. But if we can expect at least a 2% excess return on real estate, that's when we will pivot you back to real estate to take advantage of the extra premiums or risk premiums that you deserve. So as a result, if you look at this past year, you can see that the bonds and real estate are roughly similar, earning a rate about 4%. But I would suspect that as rates come down, you will see a little bit of an extra boost out of real estate. And again, as we look forward to 2026, we may bring you a new idea to the table to consider. So that's just something to keep in mind. But otherwise, as we look across your plan, at the last meeting, we rebalanced out of equities by $1.5 million. I would suspect that we will continue to rebalance out of your large cap equity positions. And the good news is that your plan actually pays significant amount of benefits. We get asked by the custodian to say, hey, Frank, on a monthly basis, where should we draw monies from? We have consistently drawn money down from your large cap US equities, and that way has helped you to automatically rebalance a part of your portfolio, taking the profits where the stock's gone up and use those profits to pay benefits. So continuously, you can expect us to draw down more of your profits and use that for benefit payments. And then we also got an injection of state monies this quarter. So I believe the state monies came in right around late August, and we had about $300,000 deployed. So this quarter alone, we already put more back into bonds, right? So again, there's been a natural kind of process and timing that's worked out beautifully for this pension plan, is that we have been able to shift slowly out of our equity positions, but at the same time adding to our fixed income positions just by the timing of some of these activities that have occurred. So I don't have any recommendations today, but again, ongoing, we will be looking at your plan really on a monthly basis to make sure everything's aligned as we see fit. But otherwise, as we look at your plan, really all news have been pretty favorable. There's been some talks of the R word or recession. We don't see that in the next 6 months. We do see US being in a patch of soft growth, and we're gonna have to just face reality of a softening labor market, but we don't see a hard crash by any means in this economy, at least in the next 6 months. So, you know, again, I'm happy to just shut up there with a lot of good news there and see if anyone else has any questions.
No, sounds good. Thank you.
You say 6 months. Do you guys do any more forecasting past that?
We try, right? But right now, there's a split path, right? So the split path depends on a lot of the tax bills that's happening. One thing that we're evaluating is the impact of this big, beautiful bill, right? You heard from Meta yesterday, they were hit with a surprise $14 billion tax hit. So we don't know a lot of the numbers that's gonna shake out, and we don't know where the tariffs ultimately will have an impact on the economy. Right now, the effective tariff rate on the US is 11%. In February, the effective tariff rate for US is 2.3%. So tariffs continue to escalate, but at some point we want to see it plateau a little bit so that corporations can really manage their budgets a little bit better, right? So there's a lot of interesting facts that's being shaken out in the next 6 months for us to have a better forecast. But in the long term, we expect simply US to be in a soft growth pattern for at least a little while, unless the labor market falls apart. If we find ourselves with a labor market that's stressed, then we could see ourselves fall back into a recession very quickly after the next 6 months. And I'll give you another reason why. So historically, the top 10% earners in the US contributed towards about 30 to 33% of the US spending. Today, this past quarter, the top 10% actually spent 53% of all total spendings. So when you have 10% of population that feels good, that's willing to spend, rest may not, what happens when the feel-good factor goes away? That 53% is going to drop pretty quickly, right? So that could set us right into recession. And what is the trigger point of that is deepening in the labor market. So if I look at the news and I may feel good today, but I say, hey, the economy is softening, Microsoft is laying off 14,000 employees, or Amazon is laying off 10, right? As I continue to see these numbers roll out, I may ask myself, well, maybe I need to save a little bit more money for a rainy day. And if, say, the top earners in the US are all pulling back because they have the same impression, that could set us into a recession in the next 6 months, right? But for the next 6, we're okay. It's just we're looking at data to then better our forecast thereafter. Hopefully that made sense. All right, well, thank you, as always. I hope to come back again in December with, with the positive news on this momentum, keep carrying us through the Santa Claus season.
Sounds great. Thank you, Frank. Pedro, you're up.
Okay, good afternoon, everyone. Hope you guys are well. So really nothing actionable to report on. Just wanted to kind of update you on some reports that are due. I know Troy has already taken care of this for you, but if you guys recall, several years ago, excuse me, there was an amendment to the Florida statutes that requires public agencies, public funds to be invested solely for pecuniary reasons. I'm not sure if you remember this, but this was kind of the buzzword for a little bit. At the time, it was coined the anti-woke bill, but essentially, I think it was really a means of trying to focus public investment, or at least in the state of Florida, public investment, strictly with the goal of making money, right? And so really it was anti-ESG, which at the time was something of a I don't know, political hot potato, if you will. So since that law was enacted, we were required to file a report of compliance with the state. So we worked with other firms, and we prepared that for you all. And there is an ongoing requirement every 2 years. We have to, again, certify to the state, and then the state in turn certifies to the Senate, and the Senate to the governor's office. But we are complying with the statute. So again, just wanted to keep you guys posted. That is something that's due this year, and again, we'll jump back on it in 2027. But just so you guys are aware, that's kind of going on in the background. But other than that, really nothing else to report on from my end.
Okay, sounds good. And also, Pedro, since Mark Severance is stepping down, I will send him his reminder to file his Form 1F as he's stepping down from the board.
Yes, please. He's got us right. He's got to complete the 1F, the one final.
Sounds good.
And it's the same process. He'll do it online through the ethics portal.
Yep.
Excuse me.
Perfect. Sounds good. Okay. Thank you, Pedro. Moving on to old business. We have none. Anybody else has anything for old business? Okay. Moving forward to the consent agenda. That's the warrant for ratification, which is warrant number 22, as well as the fund activity report. Be willing to answer any questions if you have any. Otherwise, I'll be looking for a motion to approve the consent agenda as a whole.
I'll make a motion to approve the consent agenda as presented.
Second.
Okay. Any other discussion? All in favor?
Aye.
Any opposed? Okay, consent agenda passes. We will move straight down into staff reports discussion. So the update on the state monies received for police. Last year, the plan received $424,601. This year, the plan received $479,751, an increase of $55,150. So that's a very strong increase. That's the most I've seen to this point. And I think you're the last plan that I have to go over. So that's a pretty strong number. And like Frank said, that's already been deposited, so the city already has that. You're the latest meeting I have since that money was released. So just getting you up to date on that. The next thing is, if there's no questions about the state monies, move straight into FPPTA membership renewal. The cost has not changed for 3 years. It's still the same. So if there's no questions about that, I'd be looking for a motion to approve renewing the FPPTA membership.
So moved.
Okay,
Second.
Ron. Perfect. Number 2, got it. Any other discussion? All in favor?
Aye.
Okay, the motion passes. That'll be renewed. With the process for any of these FPPTA classes, I definitely recommend you use this. All you have to do is send me an email saying that you wish to attend the upcoming, like every quarter I review them, like I'm going to review now. Send me an email saying you wish to attend. I forward that to the plan analyst assigned to your plan. He or she signs you up with that conference and then sends you a confirmation email with the hotel code to sign up for, and also a tracking form for you to track all of your expenses. So you pay for the hotel on your own and your expenses, track your mileage, and then you get reimbursed by the plan. Okay? So all you got to do is send me an email if you wish to attend any training. And then we'll move straight down into the educational opportunities, which is the FPBTA Winter Trustee School. February 1st through the 4th, 2026, and it's going to be held at the Rosen Hotel, which is a very nice hotel in Orlando. Like I said, anybody that wishes to attend, please send me an email and we will get you signed up right away. Any other questions about that? Okay, we will move straight down to the trustee reports. Any discussion, anything you'd like to discuss that you can't do outside of here?
Just to, quick question, I would imagine it would be on here if that was the case, and maybe it's already passed, but, wasn't there like a day or two training school or something somewhere close or in the county? Did that already pass? Or is
Daytona
that
Shore.
coming
That
up,
passed it.
or-
Yeah, that passed. That was in
Oh, okay.
November.
Okay,
Yep,
that was November?
November, yeah. I'm sorry,
There's a-
October.
Oh, okay.
I think it was October, Pedro.
No, I was just gonna say, so that, yeah, that was the first week of October. That was the FPPTA, but, and the state had a school as well. But the FPPTA is gonna have another trustee school coming up at the end of January next year, 2026. So if that, if those dates work for you, it's gonna be in Orlando. So it's a little bit closer than Jacksonville, where it was just held. But again, if that's more convenient, that could be something that you could attend.
And after this next school coming up, February 4th, the next one I believe is in June. That's the big conference that they do every summer. So that's the one that at the next meeting, I'll be pitching that to you as well. You want to sign up early for that one, since that one fills up and the hotel can fill up. So you don't want to be stuck at a separate hotel that you got to commute to. You want to be able to walk out of your room, go straight down to the conference. So, but we will definitely go over that at the next meeting. Anything else as far as trustee discussion? Okay, the next meeting we have scheduled is for January 15th, and that's it. If we have nothing else, then we will be adjourned.
Hi, guys.
All right,
Okay,
everybody.
Thanks, Patrick. Thanks, Pedro. Appreciate
Have
it.
a good